All right, welcome back, YouTube. So I wanted to point out a very unique situation here that's going on with Dogecoin. I know that it's a very popular saying that lightning doesn't strike the same place twice, but you are looking at two very rare occurrences happening right now on the chart. The first one we talked about in our last video, which is the breaking of trend, but we talked about it being a possibility in our previous video before that we can go down to this previous zone here to grab some liquidity. We ended up bouncing off of the interest of the zone and pretty much reestablishing the previous trend. So that alone is extremely rare because this is our current trend. We broke it, we went down below. Typically you can consolidate at a higher high, or you can consolidate at a higher high or establish a separate trend that's a little lower. But it looks like we pretty much, whatever it looks like, it's confirmed now. We've established literally like the same trend, maybe slightly higher high, but literally it's still within on the same trajectory. The second thing is we are looking at 7 consecutive days in a row of green days and or higher highs, right? Doge is closing higher and higher, very, very minimal gains, but it's still higher and higher. The close of the daily candles has been green for 7 consecutive days. Today's the 7th day, so we'll see where it closes. But this is a considerable jump here where we are right now. And this is extremely rare for Doge. I was looking back over the chart here, and it's very rare. I wasn't able to find one. Maybe I didn't go back far enough, but I have not seen one this year, it looks like. Just make sure I'm not blind. Oh, maybe here in April. Yeah, so it looks like here in April was the last time we had this happen. Not a re-breaking of the trend, though. When we broke the trend, we continued and we consolidated lower and went into the equities to get some equity. So we definitely are really in a very unique situation here. And I think that what is happening is we're going to have this consolidation, maybe at a slightly higher high, but I'm not going to move the line just yet, just in case we have to grab some liquidity, because we have 2 zones here where we're going to have to retest. One is slightly higher than where we are now. We are at 809. We have one at around 824. And more importantly, that higher range here at around above the 849. Because at the 849, that's when, if we zoom out here, that's when you start to get in a trajectory where you have the possibility of seeing that gap up to around like 9 to 10 cents. So we're literally entering a battle zone at these higher levels. But the momentum is certainly being built when you're looking at the previous 7 days and us regaining that current the trend that we're on now. So let's take a look here briefly at shorts. I don't think we have a noticeable response. Shorts are down. So nothing yet. No countermeasures, significant countermeasures just yet. And I want to point out something as well, because Doge and Ethereum were kind of trending relatively close. And I want to say Ethereum did not regain trend. It did not. So this is very, very interesting. Doge is pretty much doing its own thing now, because Ethereum and Bitcoin used to, at least for the last year or so, they pretty much trended like the mirror image of each other. They were like, if you took away the prices, you wouldn't even be able to tell the difference between an Ethereum chart and a Bitcoin chart. They traded very closely. Then over the last month or so, Ethereum and Doge had almost identical trends. And the way that they were trending up their lines, where they're getting that convergence at, it was very interesting to see the switch. And now you see Ethereum kind of doing its own thing, and literally just trending off and kind of breaking trend, but trying to restabilize itself off of the 14-day moving average. So, but let's get back here. I want to point out another big indicator for Doge, because we may be approaching some type of triple threat here. We cannot forget. This here is because remember we were talking about that lagging indicator and the 72-day and the 200. So this is that convergence that we were seeing here, and this potential cross This is really just kind of like aligning and saying that, okay, this is the momentum, the trajectory. Because if you've been following, we've been talking about it ever since we've seen this curve, and we're saying that we should see some type of climb, because the 72 and the 200 day is a little bit, it's certainly stronger than the 14 and a 200, or 14 and a 72 cross, right? Because if you see the convergence here, you'll see we're at a cross here, corresponding rise. We're going to cross here at the 200. This is the 72, by the way. This is the 14. The yellow is the 14. Orange is the 72. Red is the 200. So we have the 14 crossing the 72, the 14 crossing the 200, corresponding rises, and then we have the 72, crossing the 200. And so what does this mean? So what this ultimately means is you can have these indicators really just kind of give you an insight as far as for where the coin is actually trending, where the asset is currently trending. And what can happen is you can have this 72 continue to rise above the 200. And the great point about that is if you start to see a divergence from its current trend and start seeing it go the other way, you'll have an idea of say, okay, we're possibly getting ready to see a consolidation or breakdown. And if you're looking here at where the current trend on the 14 day, which is kind of giving you a more micro of what's going on with the coin, you'll see that the 14 days acting almost like a hand, like a ladle almost, is kind of catching the coin and it's really bouncing and using that to much balance itself right now as you get ready to retest some of those higher levels. So ultimately, this is really good here. If we get this cross, we'll probably have it within the next 24 hours. It's called a golden cross for those of you who aren't familiar. And it's certainly a much stronger indicator than the previous two. So ultimately, that can kind of excite some buyers, and you may see a bigger candle. I think this is kind of what's happening right now, because while the gains were minimal the previous few days, this is certainly a much bigger increase for where we can actually close. We were at these levels yesterday, but we ended up closing just above where we opened. But today, it's looking like we're going to have the opportunity to close at a significant increase, possibly even over 8 cents compared to yesterday. So just going to keep that in mind as we're trending up. I may move this up, but right now I'll just kind of keep it because I think it's important just to kind of get an idea of where we're grabbing liquidity from. But this is just a very rare example of just because you break trend does not mean it's the end of the world. It literally grabbed the liquidity, regained, and now we are looking at almost 7 consecutive days of 7 consecutive green days. So keep that in mind. Let me know your guys' thoughts as far as on the coin. And I will see you guys in the next video. Let me know in the comment section, and I'll be certainly happy to get back to as many of you as possible. Thanks, and I'll see you in the next one. If you like the charting that you've seen in this video or the news that I bring to this channel, you can have access to both at moomoo.com. I have a link in the description section. You can get up to 15 free stocks when you open an account with $100, and you will also get 5.1% interest on your money, FDIC insured, while you are holding cash in there if you want to wait for particular investments. And it really just adds a variety to your ability to invest in the stock market while gaining interest on your money and getting some free money. And if you want to sell those stocks and buy something else, you can. But you can have access to these charts, news, information, trainings, everything by clicking the link in the description section.